Hi everyone, this is Devins Financial Weekly Stock Analysis Newsletter. Today is February 4th, 2017. Our newsletter is for your informational purpose only. We're not responsible for your gains and losses. Let's take a look at current market trend and our strategy. Your stock market is still in a confirmed uptrend. I continue long the market with the strong stocks and ETFs and continue use the option to trade the stocks on the earning. Let's take a look at indices and the charts. German DAX index continue in the uptrend. Nasdaq uptrend is continue making new highs. Every time pull back, it's being a buy opportunity. SP 500 uptrend. Gold may break out from here, break out the previous high. Well, actually, it's already did. So gold is in the uptrend. It tested the 50-day moving average and held, and then go back up again. So gold is back to the uptrend. So it's a silver uptrend, making higher highs and testing 50-day moving average and held. Gold mining stock ETF uptrend, but we should watch for the resistance around 200-day moving average level. Crude oil is consolidating on the upside, and crude oil ETF did the same. Energy ETF is going down. China-Asia market continue in a downtrend, even though it rebounded, but it hits 50-day moving average. As long as cannot stay above 50-day moving average, this continue to be in a downtrend. We have to see, in order for the China-Asia to reverse to the uptrend, it has to go above 3,174. It has to go above there. So for now, let's just watch the Asia market. China stock ETF, FXI, this is a index ETF, and hit the previous high is a resistance. So it's just lingering around the resistance level. Biotech ETF, it's just oscillating. It's not going anywhere. Real estate ETF finds support at a 50-day moving average. We have to see what it's going to do. In order for this to go back to the uptrend, it has to go above the previous peak. So this is doing the lower peak. That's not good. But if it finds support at 50-day moving average, that's a good thing. So real estate ETF is just consolidating here. There's no clear trend. Airline stock downtrend, broke the 50-day moving average. Copper price hits previous high and consolidating here, so it has a potential to form double head or head or shoulder. We don't know yet. We just wait for the pattern to form. There's really nothing to be done there. Social media ETF uptrend. This is going uptrend. Solar stock continue to be in the downtrend, but it may be forming a base here. It's reversing. It tests the 50-day moving average and hold. So it can continue to go up there. Utility consolidating, no clear trend. Not everything has a clear trend. A lot of times it just going sideways. Stocks watch list. There are only a few stocks are still in the buy range, FCX and Tencent, Alibaba and PWR. And we take out MLM and Amazon. Those started going down. So it's not a good thing to buy those stocks. So it's out of the watch list. And a whole bunch of stocks in the uptrend, but they're out of the buy range. They're more than 5% from the initial breakout pivotal point. So they're out of the buy range. So if you have them, hold on. But if you don't have them, right now it's too late to buy. So let's take a look at those stocks. First is a few stocks that's still in the buy range. Alibaba broke out around 98. Actually, $100 should be a support for Alibaba. If it cannot hold $100, it dropped below, significantly below, such as if it go below 98, that would be a very risky thing to continue hold Alibaba. For now, it's still good. The volume is low as the stock pullback. That means the big money has not sold this stock yet. So FCX, this is in an uptrend and pull back to the previous breakout pivotal point. But this pullback, the peak is lower than previous peak. That's not a good sign. And the pullback volume is a little too high. So we have to be very cautious about the FCX. If it fall below, this is $15.70, which is a previous support, then we will be in risk. PWR, find support again. You see, when they pull back, when the stock pull back, the volume should be lower than the volume when they go up. So, and this is still good. At PWR is still good. 10 cents is also good, uptrend. So nothing wrong there. And the stocks are too extended. Adobe, uptrend, too extended. Breakout pivotal point is $111 here. And Applied Materials, uptrend. Semiconductors are in very good uptrend. Broadcom, uptrend, very strong. GKOS, uptrend, very strong. HQY, still in the uptrend. Netflix, uptrend. PRI is also in the uptrend. All those stocks are too high to buy for now, but they're still in the uptrend. And here is a list of stocks that's going to report earnings next week. And just please verify on your own the exact reporting date. I don't guarantee the accuracy. I got all this information from Yahoo Finance. So you should verify with other websites such as NASDAQ earning or something. So the one particular stock I'm keeping a close eye on is NVIDIA. This is because NVIDIA had been a very good performer last year. And end of last year to the beginning of this year, NVIDIA went through a consolidation period, and we have to see if this earning can push it out of that consolidation range. If NVIDIA gap up or jump after earning report, it can get out of that consolidation and go to the another uptrend again. That's what I'm hoping for, but we don't know until it actually happens. So we just keep a close eye and look at NVIDIA closely. And before the earning, my strategy would be buy the call option on NVIDIA. I would not buy the stock because holding the stock over the earning is very risky. The call option allow you to limit your loss and still give you opportunity to participate in upside. What to do in this market? Continue long the market and sell. Just do the rotation. Sell the weak stocks and use the money to buy strong stocks. And I prefer not to buy long the stock, but use a call option. If I think stock has a potential to go up after earning, I will buy the call option. If I think the stock may gap down, I will buy put option. If I think the stock may just not going anywhere, then just don't participate, don't play. And that's all. And for all the stocks, have the stop order in place. That's all for this week. See you next week. Thank you.